Hi, welcome to the Stockscores Market Minutes for November 4th, 2012. This week's topic, scanning the market. I'm going to show you how I scan the market for opportunities using the Stockscores.com market scanning tool. A reminder to subscribe to the free weekly newsletter and also this YouTube channel. And a special reminder for those in the Calgary and Vancouver areas, I will be doing a book launch event in Calgary on Monday, November 12th, and in Vancouver on Tuesday, November 13th. If you would like to register for those events, please go to the upcoming events area of Stockscores.com. You know, for people that read stock charts, good opportunities are easy to see if the chart is in front of you. The problem, of course, is that there are thousands and thousands of stocks trading in North America, and looking at the right stock at the right time can be difficult. We need a way to put the charts with a good potential in front of us, and the Stockscores Market Scan is the tool to achieve that objective. Now, we have a user guide on Stockscores for the Market Scan that defines all of the filters in the tool. I'm going to show you the tool in just a moment. To get the user guide, go to Stockscores.com, select Getting Started in the toolbar, then User Guide and Market Scan. But let's jump over to the Market Scan tool now and just kind of go through some of the basics of how to use the tool. This is the Market Scan tool here. We have two ways to use it. One, you can use one of the preset scans, and depending on your level of subscription, there's all kinds of different scans that I've created for you. Some of them are taught in the Stock School material, the different courses that I teach, and others are things that I've thrown up there for people to try. What I like to show you today is how to build your own scan, because for the most part the scanning tool is pretty self-explanatory once you look at the definitions of the filters in the user guide. You know, I built this tool with the idea that I wanted to be able to scan for the kinds of chart pattern setups that I like to see. So for example, I like to see abnormal price moves from low price volatility through resistance, preferably with a little heavier than normal volume. Well, if you think about those concepts, we could say, well, the volatility index yesterday would be low. We could add in that we want an abnormal price gain through resistance, let's say 15-day resistance, with stronger than normal volume. So I can say today relative to 20-day volume average, put that to above. I want stocks that are reasonably liquid. I could say at least 250 trades a day. So these are the kind of things that you can do and combine, which is what makes it so powerful. It's going to go through this huge database of every stock that trades in North America and look for these filters there. Well, if I run that now, I get a list of all the stocks that met the criteria of that strategy. But of course, we still want to view these stocks. And so to view them, I simply click on Select All, and I can either view in a gallery or a slideshow. Slideshow is one chart at a time. So there you can see a stock that made an abnormal gain today with strong volume from low volatility. By low volatility, I mean it was in a relatively narrow sideways trading range. I could go on to the next one, and again, there I see big abnormal price jump, abnormal volume, low, boring, sideways trading. So the market scan did its job. Now, if I wanted to look at these charts more quickly, instead of going through them one at a time, I can click on Gallery and look through these charts 10 at a time. And if I see something that I think looks interesting, I can click on the chart and increase the chart in size so I can see a little bit more detail in that chart. And this is what I do each evening, looking for stocks that are making breaks from good chart patterns. Now, I still have to apply my skill at reading stock charts, and one of the things that I teach people is how to read charts and how to use this tool in even more detail. And that's something that if you have an interest in learning how to trade, I recommend you go to stockscores.com/learn, where I've got details on the different courses that I teach. But if you already know something about technical analysis, you know what you're looking for, then just subscribe to the Market Scan tool. That's the advanced membership on Stockscores. You can do a 2-week trial, play with it for a while, and if you like it, it's a relatively low-cost monthly subscription. All right, let's get back to the analysis of the market. What I've done today is broken the charts out in a very short-term time frame. All the charts I'm showing today are hourly charts going back 1 month. And I chose that because, of course, this week is the big election in the United States for the president. And I felt that the market was going to be pretty quiet, pretty unpredictable until after that passed. And so I want to, more than anything, show you what to look for in reaction to the election results. Starting off, this is the chart of the S&P 500, and you can see that we have falling tops on this chart in the very short term. That means there's pessimism into the market, but we also have a good support level at the green line. So I think what to watch for is if we break down through that green line, it implies lower prices ahead. If instead we break the cycle of falling tops by breaking up through the red line, well, that implies that the buyers are going to try and take back control of the market. My personal feeling is it doesn't really matter who wins. More than anything, what's going to happen with the election behind us is the uncertainty in the market will be gone and people will get back to buying good stocks and selling bad ones. In the last few weeks, we've really seen a market that was handcuffed by uncertainty, not willing to really do a whole lot. Now, the market may decide that it needs to go lower because the outlook for earnings isn't all that great, and that's certainly possible, and that's why I want everyone to watch this short-term chart to give you a sense of where the market is going to break in the near term. This is a chart of the TSX, and it's really a better looking chart over the last month than the S&P 500. But in the last few days, we've seen it fall lower, and that's primarily because of some abnormal strength in the US dollar, which hurts a commodity-based market like the Canadian. Well, we've broken that upward trend line. Again, this is a very short-term chart, but I'm a little bit concerned here. I mean, I'm going to rate this market a neutral right now, but I do think that if the US dollar continues to rise, those commodity sectors in Canada are going to suffer, although the strength may rotate into some of the other sectors like banking. This is the Russell 2000 index, very much like the S&P, where we have falling tops towards support. Look for a break down through the green line as a sign that the market is going lower, or look for a break up through the red line as a sign that the market is going to rise. And again, I'm showing these charts rather than really giving you some analysis on what I think will happen. I want everyone to watch these charts after Tuesday because that's when we're going to get our answer and the market will start to have an opinion again. This is the 20-year Treasury Bond Fund ETF. TLT is the symbol. And it's really threatening its long-term downward trend line, which is bad for the stock market. But it hasn't made a decisive break through it yet. So I'm not overly concerned about this. But if we break up through that red line in a strong way, it implies that money is coming out of the stock market and moving back to the safety of treasury bonds. And that's a sign that investors are taking the risk off in the market and looking to hide instead of playing stocks. A bad thing for the stock market. US dollar, as I said, has been rising the last few days. You can see here the breakout. If it falls back and comes back down through that red line, then we can assume that this was just a little break in anticipation of an election, something of a, call it a fear trade, money looking to just move into safety. But I think that this is something important to watch, particularly for the Canadian market, because if this one continues higher, that's going to hurt the commodity sector. The strength in the US dollar caused gold to really have a tough couple of days, but it is at the bottom of its downward sloping channel. So you may see it bounce back in the short term, but you can't argue with the fact that gold is in a downward trend here, at least in the short term. And therefore, it's something that I'm relatively pessimistic on, although in the next couple of days you may see it rally back to the top of that channel at the red line. Oil is also a weak chart over the last, say, 2 weeks. And there's really no sign that it's going to get strong anytime soon. There's no rising bottoms here. Unless that resistance line, which I've drawn in red, is broken, I am pessimistic of oil. So my outlook then is neutral on stocks, but again, we really want to watch the market's reaction to the election results after Tuesday. I'm bearish on gold and oil, probably more bearish on oil than gold, because I think gold is a bit oversold, but really right now the market's message will be more reliable after the election on Tuesday. Investors are afraid that weakness is coming, but with uncertainty gone, the market should be able to rally regardless of who wins the election. However, ultimately, I want you all to watch those charts to see which way the market breaks after the election results. We'll have a great week in the market and trade well.